Hi, this is Randy Finney with the Right Side of the Chart, and this is a midday market update for Tuesday, December 4th, 2018. Just returned back to my desk from lunch and noticed some big movement in the market, so let's take a look at what's happening here. Uh, Today we backfilled the gaps. I was leaning towards the backfill of Monday's gaps since Monday, really. And that happened today and then some. And what happened is I've had these 60-minute uptrend lines on the 60-minute charts of SPY. That broke, so there may have been a technical catalyst, and we shot on through it. And what I'm noticing here, if we zoom in, this is a 15-minute chart. I do have a support level here, 272.45, and I think that's going to hold. I'm scan the headlines real quick. It looks like this is just more worries about the trade wars, and that's what's new, really. I thought the markets had gotten used to all the back and forth on that so far, but maybe not. At least it's leading to some volatility here. But for what it's worth, I think that's done. And as I'm doing this video, you can see a nice little hammer here on the 15-minute chart right off that level. Look for a green follow-up stick, and that might be bullish. Let's look at the 60-minute charts. Big red stick. You can see when this trend line was broken, the gap was backfilled and then some. But really, what I'm looking at here, and the reason I'm leaning towards a bounce from this point, is we had this recent area of consolidation last week in the markets, and we're now at the bottom of that consolidation zone, give or take. We may have. This is probably what I call a momentum fueled overshoot of that level. I had a support level on the 60-minute chart here, about 273.72 on SPY. And if you go back in the last few weeks, you can see quite a bit of consolidation around this level. So either way, I think the selling today is a little overdone, and I think we'll bounce from here. So I've reversed from the short. I was planning to short a pullback to these gaps here, and I'm now long for a bounce for today. And again, if you're an active trader, great. If you're a swing trader, the charts are still not very clear as to the near-term direction. And please keep in mind that if you take any swing trades or have any now, the markets will be closed tomorrow in honor of President Bush. So you're going to have one extra night of overnight risk here if you take anything home tonight. If you want to know what I think might happen or I'd like to see happen, remember we don't always get what we want. I know we sliced through that trend line, so maybe a back test. I can say that now, 277.30 would be certainly resistance, and that's if we get that today, I would be out, out of these longs. I'm just looking for a bounce trade here. But I think it's possible that we can push on up and make a marginal new high at about 281 on SPY before taking the next major leg down. But until then, I think it may be choppy, at least the rest of this week and possibly the rest of the month here as well. But let's see what happens. That was quite impulsive selling today. But again, I think this is a buying op, an op to cover shorts for those that faded the gap on Monday. And let's look at QQQ real quick. QQQ, same story, broke that 60-minute trend line. That seemed to be at least a technical catalyst for the selling. I'm sure it was matched with some headlines. And most importantly, I'm looking at this, this recent trading range from last week, and we're really pretty much at the bottom of that range. And you can see there's similar trading ranges here. So I think this is a level of support for the market. And again, this I think was a little bit of an overreaction. So let me try to get this video wrapped up so I can get out to you quick. And here's the way I look at it. If you're an active trader and you're okay with doing this, you go long here. You go long at around today's lows with a stop somewhat below. We shouldn't go much below that trading range. Maximum target if we go any lower 166, but I don't think if we go down to 166 from here, that's going to put in some real ugly candles on the daily, and that would have even longer term bearish implications. As of now, this is just another, you see this red candle here. I'm on a daily chart now. It's no different from this big green candle or this candle. This one was a hanging man or a hammer, but yeah, you can see that the length, the distance of that candle is about the same. So again, what I'm trying to get at is more the norm. We have elevated volatility as we have had since early October. Didn't want to move that line. I was trying to grab this trend line and, just to kind of eyeball it, if you take a trend line measured out there and just put it up to these other recent candles, you'll see this is just more of the same. That's all. So I'm not reading anything technically significant into this, although there are, we now are back below that 50 and 200 day. So as I said the other day, I'm sure this had a lot of longs and bulls high-fiving themselves for the fact that the Qs and SPY took out the 250. But I did a video recently saying, look, that's just par for the course. We saw that happen in 2007 during the market top. So again, don't get too excited. And just because we're below it today, I don't think it's an all-in short signal either. Like I said, active trading mode. But let me say this too. There's a lot of ways to trade this market, and I always say that. I wear different hats, and I try to give analysis for different type traders. I maintained all along that this is easily where we could reverse. This was pretty much my in my minimum bounce target range here. Big level 281.16. We fell a little shy of that on Monday's bounce. So if you were able to add back or initiate new swing shorts there, sell longs, great. You're in a good position and you can stay short. You don't have to cover on this bounce. You can set your stops at break even if you want. You can trail stops down, and there may certainly be more to come here. So I want to make mention that. So that you have to, differentiate or identify your own trading style. Are you an active trader, swing trader? I do both. In my trading account, I'm an active trader, and in the IRAs, longer term accounts, I'm a swing trader. But I did cover. I had SQQ, and I just covered that position. I was, short SQQ from recently. I was long before that, and then I actually bought it right here, I believe, the day we gapped up. So I went a little underwater on it, and then profitable. Or did I add it? I may have added it that on Monday. Either way, that's moot. Maybe I added on. I have several different IRA accounts, and it was nicely profitable when I closed it today. So maybe I did scale back in there. Either way, that's moot. So looking for a bounce from this level at least today. And again, tomorrow is the markets are closed, so active traders will have to decide if you want to take that home, any positions, long or short, that you take home today. So did I already cover 60-minute chart on QQQ? I think I did. Showed you the breakdown there. 15-minute chart on QQQ. Support all up in here. I can draw a lot of trend lines. There's been so much activity in the market. I could certainly draw a trend line right here. A support level, I should say, horizontal support level, about 167.77. The bottom of the tail end of last week's trading range. This was here was a big trading range, but if you look at just the last few days, there it is. So what I'm looking at now is for at least an active trading or day trading op, or even a swing trading op, that nice hammer. Look at that doji candlestick there. If you get a follow-up green candle, that would be bullish. And if my uppermost target, if I didn't mention this earlier, about 175.50-ish on QQQ. That would be, oops, there goes the chart. That would be my most, right now, my most bullish scenario. And not that we can't go higher, but if we got up there, I think that'd be a great place to reverse from long, any longs taken here. And I think it'll be a little bit of a grind. We are closed tomorrow, and this might even have to happen throughout the end of the year if volatility starts to subside. But I think we might be able to work our way up there, and that might offer the next objective long-term swing shorting up. Again, if we get there. Now, if we don't, that's plan A. I'd like to see that, and I'm leaning towards that move up, although that would be quite a bit. Let me measure it out for you and just make sure it aligns with what I'm looking at on SPY. So from where we're at today, let me go from the lows today. That would be about almost a 5% gain. And on SPY, I was looking at 281. Remember, SPY is a little less volatile. So you're not going to, 3.18. That would about mesh right now because the volatility is much higher in QQQ, especially recently. And so about a 3.2% gain for slightly less than a 5% gain in QQQ, that would align. So there are my, let's just say, preferred bounce targets. Love to see it. I'd love to ride up some longs back to that level and then reverse short as we got close to it. And that would, again, look something like this, but more with some more zigzags along the way, more than likely. All right, so let's look at the futures, and I'll wrap this up so I can get the video out to you guys. NQ, there was a 60-minute chart we're looking at here. We had an uptrend line. We broke below it last night in last night's trading, back tested all day today, and gave up the ghost. However, there is support here. I can draw lines all over this chart, but I should highlight this one. Again, what I'm looking at there is the bottom of this recent sideways trading range. So to me, this is an objective. This is where you watch the markets. This is where you just have to react. And when I see something like this, a big move down to a decent support, I look at the headlines. They don't really match the move, in my opinion, and that's where I reverse from short to long. So the next one up, ES, and then we'll wrap this video up. For you ES traders, ES are, of course, the S&P 500 E-mini futures. And you can see as I look at this chart, We also have ES down to support. You have the recent trading range right here from last week, and we overshot it by just a hair. You guys know I use a term I made up called momentum fueled overshoot. When you have a lot of downward velocity in a security, this is a waterfall intraday sell-off. It is more than common that you will overshoot the support level that is finally going to, or technically should have stopped that move. So there's a momentum fueled overshoot. The fact we already snapped back above helps confirm it. So there it is. Let me get this out to you guys. So hopefully you can, if you did fade the gap on Monday, you might want to cover some shorts and maybe even reverse long. Right now, bounce targets, let's say, if you can hold on, ride through tomorrow's market closure. I don't know, the futures may be open. I'm not sure. I have to check that. But 27.6438, I think, is a nice, near-term bounce target if you don't want to ride it all the way up, like I just showed you on QQQ and NQ. I mean QQQ and SPY. Excuse me. And then on NQ. A bare minimum, I think we bounce back here to 69.7287, so we'll call that 69.83. But, I like a trade like this where you just go long here, set your stop a little bit below, and, hold your nose and let it ride. If you do, again, if you think we can come back up and back test this trend line, or even go on, as I said a minute ago, to take out Monday's highs, and that wouldn't happen probably. It might take until the end of the month or so, but that's one thing that I'm right now open to on this particular trade. So let me wrap it up here, get this out to you guys, and if anything else happens today, I'll update it. But like I said, be careful. If we go much lower, it's going to put in some pretty ugly sticks on the daily chart. Right now, I showed you earlier, we have a pretty big red candle. Again, it's within the norm of what usually happens here. If we go much lower, I have lots of different charts with different support levels. This would be 268.33, should hold on SPY. QQQ is flirting. It just overshot that 169.53. But again, I showed you some other near-term support levels. So, all right, we'll wrap it up here. And if anything changes, with my near-term outlook, intermediate term picture is still a little unclear, but if anything does change, I'll try to do an update as soon as possible. And this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.